We're going to keep it around loans, on how to tide over any sort of cash crunch and financial crisis that this pandemic may bring about, because as we saw last year and to some extent we may see this year as well, the pandemic, the localized lockdowns, the constraints in manufacturing activity is something that could hit livelihoods as well. It could hit our incomes as well. So the question is for you, and of course let's not mention if in case individuals have to get themselves treated at hospitals, they have to pay those bills as well. So there could be a situation that you may be looking at right now where you are facing a cash crunch. How should you tide over such cash crunch situations? When should you opt for a loan? When could you use your credit card? We'll be discussing all of this in today's episode of the show. So now let me introduce Mr. Harsh Roongta. He's a personal finance expert. Mr. Roongta, thank you so much for taking out time. I hope you and your family are keeping safe amidst the pandemic.
Oh, absolutely. But the heart breaks at the news that we are just hearing. We hope everybody remains safe.
Absolutely. That's the hope and prayer, really, I think, at this point of time for everyone. So, yeah, Mr. Roongta, as we are grappling with the fallout of the COVID-19 second wave, health-wise and, of course, from a financial perspective as well, what are the steps that individuals who mercifully have not been hit yet by any sort of financial crunch should ensure they take early on as a proactive and a preemptive measure?
So I think if you have not been hit so far, neither health-wise, of course, and neither say with your finances, then I think the best thing you could do is to prepare basically an emergency and a contingency fund. And it should literally be in your bank. I don't think at this point, when you're preparing for a crisis like this, you do not want it to be anywhere else. You need it a card swipe away, internet transfer away. So I think this kind of a contingency fund needs to be just kept in a bank. The only thing is, do not keep it in your regular account. Please have it in a separate account so that it is segregated. But create that contingency fund. I think it is extremely important to prepare even before you are hit. In fact, it's much more important to prepare before you are hit, and it's easier than to react later.
Yeah, I think that was one lesson we learned from the previous, wave as well. And that is the importance of having an emergency fund. These times are very uncertain. We don't know what tomorrow holds from any perspective, an income perspective or a health perspective. And an emergency fund, helps you tide over, something like this. So now let's talk about those individuals who are currently in the midst of something like this. They may have lost their job or their businesses. A lot of MSMEs as well have been shut down, right? So their businesses have been disrupted, because of which, again, income has stopped. How do you recommend, they sort of tide over any sort of cash crunch? What are the resources they can tap?
So I think it needs to be a tiered approach, okay? And I think top of the tier is liquidating your assets that are not needed for the long term. So obviously, if you have an emergency fund, obviously this is the time to use it. If you have assets, in fact, most families have fairly liquid assets in terms of gold, etc. Now, if there is no emotional attachment to those assets, and they're not family heirlooms, or they're not memories of a certain time, etc., I think liquidating them makes sense. And putting them, when you're already in a cash crunch, liquidating the asset and having that money is a better option than taking a loan against that asset. So I think that remains your number one response. Liquidate as many of the assets as you can. And fortunately, even those people who might have equity assets, etc., the equity markets are doing reasonably okay. If you are in such a crunch that you have no choice but to liquidate, so I'm not recommending liquidation to people who are not affected by the cash crunch. But if you are in an emergency situation, then I think liquidating that is not a bad option at all. Uh, Second tier would be borrowing against assets. Some assets you might not be able to liquidate. Now, if you have movable assets, then borrowing against that is relatively easier. So, it could be your jewelry, it could be your, uh, it could be national savings certificates, and those kind of things, which you cannot liquidate, but against which you can get a loan at very reasonable rates. So I think that becomes your second tier of taking loans against the assets that you cannot liquidate. Another option there is taking a friendly loan from families. Ultimately, friends and families are meant for emergencies. And if at all you have access to such funds, where the repayment might be a little easier on a payable when able basis, now is the time to find out whether those resources are available or not. I think in emergency is the time to find out, who are your real friends. And I think a last option could be trying to take an unsecured loan. I think getting unsecured loans would be pretty tough, especially if you have lost your source of income. So the ability to get unsecured personal loans itself will be hugely affected unless you're taking it on an already issued credit card, etc. But that, I think, is a last resort that you should basically look at.
Mr. Roongta, unfortunately, many Indians also have home loans to pay. Now, I know you mentioned that first resort is, of course, you start liquidating the assets. I mean, you invested in those assets for such conditions, right? So you start liquidating the assets, then you start looking at borrowing money, then you look at an unsecured loan. Would you recommend that for people who already may be having, debts to pay like EMIs, etc., on maybe their house or their car as well?
So again, I mean, we are talking of this in the context of people who have lost their source of income. Okay. And therefore, for them, I think defaulting on the loan, there may not be a choice at all. Because how can you afford to pay back a loan at a time when your income has stopped? And if you have no assets to liquidate, if you have assets to liquidate, please try and pay your loan and keep up your credit record if you can. But if you have lost your source of income, and if that is because of the COVID, and I think we will get more programs again because of the second wave, we will get, the reschedulement programs basically meant for those affected by the second wave of COVID. Now the number of people are quite large. So then maybe you approach, if you have a home loan, you approach the bank, you see here, I've lost my job, my business has stopped, please give me a reschedulement. And I think that would definitely be possible. But as I'm saying, if you have the assets, first try and liquidate the assets. Obviously, the funds first go to meet your living expenses, the bare living expenses. That
actually, if I could just add on one more question there. I also want to ask you if it's a wise idea to take an unsecured loan to pay off your EMIs, because like you mentioned, many people want, that clean record as well. So do you think that could also be, do you think that's a wise option?
It would be a wise option if it is available. So somebody who has lost his job is not going to get an unsecured loan. It's not possible. Okay, because anybody who gives you an unsecured loan is going to look at continuity. Is your income continuing? And so you will not get. The only place, as I said, where you might still get an unsecured loan is on your credit card with a large limit if you have, and a certain portion is allowed to be withdrawn. Maybe that is what you would possibly get. But otherwise, if you have lost your source of income, then you won't even get an unsecured loan. unless it is from family or friends, etc., who are not really looking at your immediate repayment capacity.
Exactly. While we are talking about this whole topic on getting an unsecured loan, let me remind our viewers about something that we had discussed on the Money Show, a practice which was very rampant until the RBI sort of stepped in. A lot of fintech apps had come into the market in these last few months. They were digital lending platforms that provided easy loans. Even if you have no income, no credit, records or anything, they provided you an instant and easy loan. We have read numerous reports about how certain individuals have been harassed brutally by these fintech apps because on the time of at the time of recovery, these apps have resorted to unfair practices and methods which have driven these borrowers to take very drastic steps, including taking their own lives. So I think if something is very easily available to you as well, you need to be cautious about the terms and conditions and everything else that comes attached with something like this. So I think just to jog our our viewers as well, it's important to put that into perspective too, because like Mr. Roongta mentioned, if you have no income, it's going to be very difficult for you to get an unsecured loan. Perhaps a gold loan could as well be a good option. Most Indian households, of course, do have gold lying in some form or the other, in the form of jewelry or etc. or coins. So a gold loan in such a circumstance could still be a good viable option for you. The interest rates as well may be relatively a little lower, but again it depends on several factors, including your income level. So that as well is something that you should keep in mind. Mr. Roongta, what should one do then about I know you mentioned that now maybe there may be a new program that the central bank, that the government may come out with to deal with the ramifications of this second wave. But if we have to talk about debt payments, firstly, how much of your income should be used to pay debt, and secondly, what if those debt levels exceed that ratio, given the fact that we are in extraordinary circumstances? Many people may face income cuts. So then what should you do in that case?
So as I said, all those rules of the thumb presuppose a normal environment. We are not living in a normal environment. But even assuming a normal environment, I think the rule of the thumb is, say, 40% of your net income in a month. Not more than 40% should be towards debt servicing. If it is more than that, it's a matter of worry, especially if your income is of the fluctuating type, where the variability of your income is quite high. And now I think that variability of the income is visiting salaried people also. Some of the salaried people it is visiting who work for industries like, say, hospitality. Lots of industries are hugely hit because of the COVID pandemic. And obviously their ability to pay their employees is impacted. So I think the crisis or the impact that we have seen on the corporate sector is bound to is spilling over in the individual sector. And we will see this impact. And therefore, I think that first thing I mentioned, you mentioned about, liquidating, you mentioned about gold loans. I'm saying if you have the gold, think about liquidating the gold rather than taking a gold loan against it. Taking a gold loan should be a second option. I think it's a lesser of a worry today if the ratio is going from 40 to 50%. Again, as I'm saying, if it is going high, obviously it is very clear you don't really have scope to build a contingency fund. I think the only way to do that is to try and increase your income. So increase the denominator. I think to take a preemptive step today could again be liquidating assets. Don't wait for the crisis to hit. Look at liquidating assets to create a contingency. I think we have reached a situation where people should proactively think of liquidating the assets, even if there is no immediate need.
Okay, so I stand corrected on that front. If you do have gold, which most of us do have, consider liquidating it. Mr. Roongta advises, don't look at taking a gold loan, consider liquidating that gold. If God wishes, of course, everything will improve and you can, get back to your regular income levels, buy the gold back. But right now, looking at the emergency, consider liquidating it. And of course, if it's an emergency, you don't have to look at pricing, etc. Well, I think with that, Mr. Roongta, we are out of time. Really thank you for joining us today and, helping our viewers, guiding them through these difficult times. I hope you and your family as well come out safe from this pandemic.
And everybody the same. Thank you.